Let's go over to our man. We got a new guest for you, folks. We are going to be talking currencies. You gotta love
Forex.
It.
Gotta love it.
Teddy Kekstadt. Teddy has a website, Forex Trading Unlocked. Teddy, welcome to TFNN.
How you doing, guys?
Doing great, man. Yourself?
Morning, Teddy.
Doing well. It's a nice day in Chicago. It's not as humid as it was yesterday, so can't complain.
Welcome. Don't stay away from Florida then, man, because we got some humidity for you right here.
But you know, it's interesting. We do know the difference. Like even with Boston, Chicago, when that gets humid in the summer, that cement heats up and it doesn't go away. You know,
as opposed to Florida.
Well, our sun
he is so biased, Teddy. He is so biased. I can't even understand.
I spent a lot of time in Boston. It's the same as it is here. Believe me.
No, Boston gets hot, but we're right there with you guys, man, for sure. So, Teddy, we know we were introduced to you. You do some writing over there for Nadex, but you have your site, Forex Trading Unlocked. So tell us a little bit about yourself, what you do for trading, what you're looking at in the markets.
Okay, well, I've been in the business since 1989. I started out at the CBOE. I spent over 20 years in the S&P 500 pit at the CME. So I started my company, it'll be almost 10 years in August. Yeah, I do analysis for some institutional groups and traders. I do consulting in the technology space for traders and trading groups and clearinghouses and stuff. So, and I built my website initially as just a tool for myself, and then it just turned into a business over time.
Sweet.
So, yeah, so I'm really happy.
So, you know, we've had a huge amount of moves in currency, man. I mean, you know, this dollar move when we went topside, I mean, it's taken apart, what, the Argentina peso, it's taken apart the Brazilian real.
Man, right.
I mean, it's taken apart a lot of currencies. So, what do you think about the dollar right now?
Well, I think the dollar right now, I mean, obviously it's not hard for anyone to know this in flux. I think the biggest thing to really kind of watch right now is the Japanese yen.
Okay.
The dollar, for some reason, even with all this trade, you know, rumblings with what's going on with the trade wars and whatever, the U.S. dollar yen has been so strong for the past couple months. And the way it was looking actually, like over the past week, was like it was ready to actually start going down, actually.
Okay.
And I'm actually, today and tomorrow, I'm looking to see if it can get above 111 even in the Japanese yen, then I think the dollar might get a huge rally actually off of
wait, I mean, you know, I watched that yen closely because in the gold market, which I'm in, you know, if that yen gets stronger, gold will get stronger. But if that yen goes over that of 111, man, gold's going to get toasted.
Right. Yeah. Exactly. Yeah, gold is something to definitely watch right now too. It's pretty interesting how with the way oil's holding up and the way gold's been kind of like skittish. It's really weird because usually you get the curve between gold, interest rates, and oil.
I know.
Right now, it's not acting the way it normally does, you know?
No, it's not. And you know what's intriguing is that, you know, the gold and silver equities have held up. So, I mean, gold's down like $125 since April, almost 130.
Big numbers, right?
And, you know, the equities have still held up, so it's going to be like, who's going to win? You know what I mean? And the bond market, oh, my God, I mean, we all think interest rates are going to go up. Well, guess what? The market's saying that I'm going to keep buying those bonds, man.
Right. Absolutely. Absolutely. Yeah, it's kind of funny you say that because I've been watching the S&Ps lately, you know, and obviously they've been getting a little hammered over the past week and a half, and the rally that's going on right now is, you know, I think right now it's just profit taking right now. No, I don't think that today what's going on is really indicative of anything new in the market, really, to be quite honest with you. So especially with the euro flirting with making new lows again, you know. So now that's where the dollar, it's going to be interesting to see how that happens. Like I said, the yen, I'm looking for it to get above 111 even.
Okay.
Euro starts falling back down into that 115 half range, then I think we might start to see some pressure again on that in that cross rate.
Yeah, it's going to be intriguing, man.
There's so much going on in terms of the world, in terms of what shapes those two.
Well, it is, because both of those moves, like the euro went down so dramatically, the dollar went up so dramatically, and it's like, okay, they're bouncing around these levels only for about a week and a half, and the real question is that the first leg down, first leg up, or is it going to be a reversal at this point, you know?
Right.
So
and then you also made the comment about the interest rate market right now, like, I'm sure you guys probably watch the 10-year more in the shorter term rates.
Yes.
I started trading the 30-year note back in the early 90s, and it's still always a benchmark for me when I'm looking at interest rates because no matter what, the long term drives interest rates in the long term, right? So, but with the little bounce they have going on, it's if the bonds get another two full dollar handle rally over the next, say, like week and a half, going into a holiday market, I think we might see an interesting kind of like vacuum move that unfolds, because we're kind of heading in. I mean, you were talking about the holiday market earlier. I kind of caught a little piece of that. We're basically coming into 3 weekends. We have the weekend coming up. We have a couple days, a weekend in the middle of the week, and then another weekend.
Yeah.
So when that happens, you know how it is. Like New York and L.A. To L.A., all the traders are on vacation, whatever. But
Boston
the rest,
included as well, right?
Vacation, right?
Yeah.
You know, it's amazing that you just brought up, and this is so cool, folks, because in the 90s, right, I remember when we were day trading continually, when you were in the pit, that bond, that 30-year bond, well, I don't know if it's all day traders, but you traded off the 30-year bond.
Okay.
But then it was only moving, what, 2 or 3 ticks, right? But as that movement came in, the correlation was so direct between that movement and the S&Ps, it was amazing. I mean, you're
100% right. When I was in the S&Ps, I used to trade the bonds off of the S&Ps.
Right.
I was always looking up at the boards, and then I'd be literally placing orders between the two exchanges.
Yeah. I know, man.
The world changes, man. That's
it's
crazy.
Listen,
I know.
You know, and it does, and I continue. I love the bond market. I mean, because it's just. But who would ever think that, you know, you got a 30-year moving by
volatility.
19 to 20 ticks like nothing?
And
it's
it's
like
nothing,
oh,
right?
Yeah,
Right.
really. It's
Right. I know it used to be like if you had a half handle move and made like 16 ticks in a bond move, you'd be like, oh my God, it was like Christmas.
It was seriously, man. And you know, technology wasn't as quick then, but you know, it was quick. But if you had a couple ticks made a big difference inside where that S&P would want to go. The correlation was so direct. What I'm trying to figure out is that, like, this dollar move. It's like the right now. Okay, is it the dollar? Is it the euro? Is it the bonds? It seems like there's divergence in there. Do you know what I mean? Like, okay, what? Well, particularly because of gold. You know, it's like, okay, man, gold's down. You know, the bonds are up. Pretty amazing.
Right.
Well, listen, it's a pleasure.
Yeah.
You know, we look forward to having you on again. And folks, you can go right to our website at TFNN. Right on the front page, you're going to see the Nadex news.
Yeah,
come on
Teddy's
over.
got a bunch of great articles. We got one up there for the Euro-US dollar last week. We'll talk about it after the break and send people over. Teddy, thank you so much,
Teddy,
man.
have a great
Thank
one
you
and
guys.
safe one.
I'll talk to you soon.
Definitely.
Great day.
Thanks, man.
Stay right there, folks. Tommy and I come right back.